Well, I have developed a 7-step process for myself when I am investing in the stock market, and I want to share this 7-step process with you. Number 1, use a filtering system. See, there are 5,000 companies in the stock market, and I want only 10 or 20 companies to be included as a part of my investment portfolio, right? So I need a filtering system. That filtering system can be anything. I might look at debt-free companies. I might look at companies which have a PE ratio of less than 20. I might want to look at companies where the return on equity is minimum 20 or 25%. I might look at companies which are doing stock buybacks. So I can look at multiple different screens or filters, and I want to see what kind of companies show up for these different screens. And I might club these screens together to further filter these companies. So for example, I might want to put a filter which says the company should have market capitalization of between 3,000 and 5,000 crore, number 1. That will give me a list of companies. Out of these companies, I want to look at only those companies which are debt-free. The list will reduce. Then again, out of these, I want to look at only those companies where the companies have done stock buybacks, or I might want to look at only those companies where the return on equity is minimum 20%. So as I keep adding more filters, the list keeps going down and down. So let's say I am left with 10 companies. So that is my filtering system. So that's step number 1. I use a filtering system. Step number 2, pick the best out of the lot. So let's say I have used my filters. I have used 4 or 5 filters, and I have 10 companies now. With those 10 companies, I look at the financials of these 10 companies together. I look at some basic things like how much cash does this company have? What is the market value of the company? What is the latest earning of the company? What are the total assets of the company? I look at some basic numbers, and out of these, I pick the best business which I feel based on the numbers that I see. I pick the best business out of these 10 businesses because I don't want to spend my time on all 10 businesses. So I want to pick the best out of these 10 and then go to step 3. Step 3 is study the numbers of the business. Once I have selected one business from those 10, then I have a framework where I put the numbers of this business for the past 10 years. I look at the profit and loss account, balance sheet and cash flow statement of this company for the past 10 years. And I compare these numbers. I look at the trends. That is studying the numbers of the business. Number 4, after I have looked at the numbers, then I look at the quality of the business because the numbers tell me whether the business is doing well or not. Then number 4 is, how do I look at the quality of the business? First filter is that the numbers are telling me that the business is high quality. Then I look at where is the management coming from. Then I look at what has the management done in the past. Then I look at the qualitative aspects of the business. Who are the competitors? What competitive advantage this company has? Things like that. So quantitative and qualitative, both are covered in step number 3 and 4. Step number 5 is I have to make a decision. Now that I have analyzed the company, I have to make a decision whether this company is worth investing in or not. Now, just because the company is worth investing in doesn't mean that I put my money immediately. Who knows, the company might be overvalued, right? The step number 5 is to make a decision as to whether the company is worth investing in or not. I might not invest now, but I might invest sometime in the future, maybe after 1 year or maybe after 2 years. That is step number 5. I have to make a decision. Step number 6, I have to make an allocation and invest when the right time comes. So when the stock price of the company reaches to a level where I am comfortable investing, only then I make that decision. Only then I pull the trigger, right? So that is how I invest. And when I'm investing my money in a stock, I decide what should be the allocation. Should it be 5% of my portfolio or should it be 10% of my portfolio? I usually never go below 5% because I want to make a meaningful bet. So that is number 6, making an allocation and investing. And lastly, number 7, monitoring the company. I look at the quarterly report released by the company every quarter. And if I find something is wrong or the company is moving in some direction which I don't want the company to go into, maybe acquiring some unrelated business, then I might want to reduce my position or sell the position altogether. So these are the 7 steps that I am using when I am making investments in the stock market. Once I am done with this 7-step process, then I go back to step number 1, where I am basically putting some different filters and trying to look at some other list and trying to find one company out of that list to again repeat basically that same process to fill out my stock portfolio over a period of time. And I don't rush through this process, because learning about a company sometimes takes weeks, months, sometimes years. So if I find a company, I might spend a couple of months analyzing the company, because I am not in a hurry. I have a lot of patience. There are 5,000 companies in the market. I only want 10 or 20. So this is the 7-step process that I am following when I am making my stock market investments. Thank you so much.